G'day guys, welcome to the channel. My name's Tim, and on today's episode we're taking a look at Bitcoin and this particular lip right here that we're noticing on the price action, on the RSI and on the Stoch RSI. This could be the most important thing to be looking at right now with cryptocurrency. Forget about Sol, look at Bitcoin. Bitcoin is king, and this lip could be telling us what's happening next. Okay, so let's get started. So first of all, I'm going to bring up the Bitcoin chart from 2013 to 2021, and we can see that this ABC wave correction has occurred on every cycle so far, bouncing off the 50-week moving average, which is this pink line. You can see right here, it bounces off, goes up, the B wave turns around, and then we end up bottoming out at the bottom of the C wave. Same thing happens again in 2017. We bounce off the 50-week, goes up, we turn around and go back down to the bottom of the C wave. Same thing happened again in 2019 and 2020, bounced off the 50, up, down. And now in 2021, we've bounced off the 50, we've gone up for the B wave, and we're starting to turn over. As we can see in the close-up right here, you can see that we've started the way down. Now, again, this could be part of a correction, and then we go up again. That is a possibility, but what has played out on every other cycle at this particular point after hitting and bouncing off the 50-week is that we've continued on, crashed through the 50-week right here, and we've bottomed out. So that would mean for Bitcoin, in 2021, the chart would look something like a C wave crashing through the 50-week like that. Okay, so to emphasize this point a little bit more clearer, what I've done is I've taken the major cycles, 2013, 17, and 2021, and I've put them side by side so we can compare them. So let's have a look at what the RSI, the price action, and Stoch RSI are doing between the cycles. Okay, so before we go into the RSIs in more detail, let's have a look visually at the three cycles. I just find it incredible how similar looking they are. Now, the market caps were very different. So we peaked here at about $1,100 or so. We peaked here at about $19,000, $20,000, and we peaked here at about $64,000. So the market caps are different, but just the shape, look at the shape. So we think of 2013 and 2017 as being blow-off tops. But if you look at 2021, you could almost argue that that was a blow-off top right there, but then we pushed it back up again, did this a couple of times, and then we did the crash part of the blow-off top. So, it does look very similar in many ways. Now, let's have a look. So at a macro level, we reach a peak, this is the A wave. We go down, we bounce off the 50-week moving average. Now, I've got the closes here, but if you actually choose the candles, the candle wicked down to the 50 and it bounced right off the 50-week moving average. We had the B wave, which was a very strong bullish momentum, and then that turned around, and then we ended up crashing through the 50-week and bottoming out. Now, the RSI did something very similar. You can see the RSI here is in the overbought section, and we crashed back down to this same bottom point, and then we went up for a B wave, and then we crashed back down again. Now, the Stoch RSI, you'll notice, is a little bit more exaggerated. It started up high, went to the bottom at the same point here, and then it went up at the same point here at the B wave, and then we went down and up again, which was this little section here. So there was a little rally here that occurred before we then bottomed out finally. Now, the exact same pattern played out in 2017, 2018. So you can see the price action up here, the RSI and the Stoch RSI, they all bottom at the same time in this A wave. They all go up at the same time for the B wave, and then the RSI and the price go down in their final C waves, and the Stoch RSI goes down, up, down for this little rally that occurred here before bottoming out at the bottom. Now, if we have a look at 2021, the RSI peaked right here when Bitcoin hit 40K, which is very interesting, and then we just had a bearish divergence in the same way we did in the other cycles, but this time we kept going up, which is very interesting. So the A wave started here at the top of the price action in 2021 in April. We went down here to this point here, and the RSI and the Stoch RSI also bottomed around that point. You can see the Stoch RSI was quite low that entire time on a bit of a downtrend. And then At this point here, we bounced off the 50-week, just like we did in 2017 and just like we did in 2013, and we had the bullish momentum, and now we're starting to turn on the price, the RSI, and also the stock RSI. Okay, so next what I'd like to do is zoom in to this section here, this B wave correction that we're currently in at the moment. I'd like to zoom in on 2013, 2017, and 2021 and just show you what the weekly chart looked like side by side. Okay, so you can see here in the 2013, 2014 cycle, there is the wick where we bounced off the 50-week. And after that point, look at this. We just had a series of green weeks in a row. Does that look familiar? And then in 2017, after bouncing off the 50-week, we had a series of green weeks in a row. Does that look familiar? Well, it should, because if you look at 2021, when we bounced off, I mean, you can see here we closed right on the 50-week. We had a series of green weeks all in a row. I think it's staggering how similar these three cycles are playing out. So what happened next in 2013 and 2017? Well, after having all this bullish momentum, all these green weeks in a row, it all of a sudden changed. And we started having, you can see in 2013, 2014, we had a big red week, which took out, if you go down to the wick here, it ended up taking out over 2 of the past weeks. Then it closed back up here. We had a couple green weeks in a row again. And I bet you at that time that people were saying, okay, this is the pullback, and now we're going off to the moon again. That's what people would have been saying at that time. I can guarantee it. But what happened instead is that we turned around, we crashed through the 50-week moving average, and that's critical. And look how strong that crash was, that big red candle, and then we ended up bottoming out a couple months later. Then in 2017, after we went up, or 2018, after we went up in with all the green weeks in a row, we turned around and we just had red, 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 one green week, red, 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 crashing through the 50-week moving average. So right now, we've had one close of a red week, and we're currently in the next week. Okay, so here's the weekly chart again, and this is more up to date now. So you can see we've had the close of the red week, and now we're currently in the next week, and it's red at the moment. Now, the other interesting thing here is that we have been staying inside this channel for this entire period right here, and we've now fallen out of the channel. Now, if we go to a daily chart, we can see this more clearly. So this blue line also lines up with this red line here, which is the 20-day moving average. And you can see that we haven't gone below the 20-day moving average yet. And at this point, we wicked below it a couple times, and then we went up, and now we're retesting it as we speak. But as you can see, we're starting to move sideways. So this could be showing some signs that we are turning around. Now, again, if we do crash through the 20-day moving average right here, this orange line here is the 50-day moving average, which on the way up in the bull run, we bounced off. You can see we go through the red line, which is the 20-day, and we bounce off the 50-day. So in a bull run, we typically stay above the 50-day until we don't. And last time we crashed through it, the next thing that happened was this big dump right here. Okay, so going back to this again, in the daily chart, we can see the bearish divergence. Here's the stock RSI going down, and you can see that the RSI is also going down. If we go into the weekly, we can see the bearish divergence there, and there's that lip that we've been looking at also. So at a macro level, looking at the weekly chart, you can see the pattern that's playing out at the moment. If we've bounced off the 50-week, we've gone up, and we're starting to come back down. And look at this. This here is the 20-week and the 50-week, which both appear to be converging. And if we continue this trend, we should see a death cross in the coming months. So a lot of people are thinking by the end of this year, November, December, we're going to reach all-time highs. Looking at these charts, I think we're more likely to see a death cross by the end of the year. Now, finally, let's have a look at the DXY. And we know that the DXY and Bitcoin have an inverse correlation. So the DXY is the US dollar index. And when the dollar is going up, Bitcoin is going down, and vice versa. We can see the COVID crash right here when the dollar was up quite high, and then we can see the peaks when the dollar was down low. Now, the dollar has done a double bottom on a monthly time frame. That's a very serious type of double bottom, which is a very bullish reversal pattern. And currently we tested the top of this W right here. You can see it poked above the green. We've gone back down. But at this stage, we are still in an uptrend with the US dollar. Now, this combined with the fact that the Fed recently announced that they will be tapering their bond purchases sometime this year, and I mean, we're almost in September, so you've got September, October, November, December. There's only 4 months to go. So sometime in the next 4 months, the Fed will be tapering their bond purchases, which is likely to cause some concern in the stock markets, and it's also likely to increase the dollar value as some people get out of the stock market. Now, if the dollar value goes up and we move into a risk-off phase, that won't be good for Bitcoin for the remainder of this year. Okay, so in summary, what's happening right now is that we've formed the A wave, the B wave, and we've now started the potential C wave. Now, this pattern is currently in play, and until it's invalidated, this is the pattern that's playing out at the moment, and it's heading towards the 50-week moving average. And if we do cross through the 50-week, like we've done in 2019, 2020, 2017, 2018, and also 2013, we haven't recovered until we've bottomed out. So that appears to be the pattern that is starting to be in play at the moment, and the RSIs and the Stoch RSIs are all lining up. That combined with the US dollar that is in an uptrend, and the fact that we know that the Fed will be tapering bond purchases later this year, means that Bitcoin is in a very dangerous position. And even though we've seen a couple of altcoins like ADA and Sol reach new all-time highs, when you look at the overall crypto market cap right now, this relief rally that we've had so far is appearing to hit its head at this 618 and 786 Fibonacci level, which is a very common level to hit its head on. So it appears that there's only a select number of altcoins that have been pumping, but the overall market could be on a down trajectory. Okay, so I hope you enjoyed that content. I think things are going to be very interesting over the next couple of weeks. At the moment, there's a lot of people that are very bullish, which is quite normal. When you're at the peaks of a cycle, everyone is very, very bullish, and everyone is thinking that we're going to the moon. But the data, to me, I think is overwhelming. It's overwhelming that we are most likely, the probability of going down is so high, especially considering the macro elements that sit outside of Bitcoin. So anyway, I hope you enjoyed that content. Please subscribe, like the channel, follow me on Twitter at TechnicalTimCR1. And until next time, I'm Tim, and cheers.